Nvidia earnings are out, and we have the numbers. Coming in with a whopping $39.33 billion of revenue, that beat the average estimate of $38.05 billion, so about a $1.3 billion beat. Adjusted EPS of 89 cents versus the estimate of 84 cents, a handsome beat as well. Net income of $22.09 billion, gross margin of 73%, which also beat estimates. EBIT misses at $24.3 billion versus $24.53 billion. Estimate and Q1 outlook sees revenue at $43 billion plus or minus 2%. So what's actually crazy about this guidance is, yes, they're guiding up from $39 billion in this quarter, $39.33 billion, all the way up to $43 billion. The highest estimate was almost $48 billion for the guidance, and the lowest estimate was about $36 billion. So it was actually kind of in the middle of the low and the high end range for guidance. And here you can see the percentages. Q4 revenue up 12% quarter over quarter, up 78% year over year. Net income up 14% quarter over quarter, 80% year over year. GAAP EPS up 14% quarter over quarter, 82% year over year. Gross margins down 3 points year over year. Operating income up 77% year over year. Full year 2025 revenue of $130.5 billion, up 114% year over year. Full year GAAP EPS of $2.94, up 147% year over year. And gross margin expected at 75% in 2025, up 2.3% year over year. So really, all of this looks pretty good. It says record quarterly and full year revenue driven by strong AI demand. Data center revenue reached $35.6 billion in Q4, up 16% quarter over quarter, 93% year over year. Gaming revenue declined 22% quarter over quarter. Automotive revenue, which has been a lagging area, surged 103% year over year to $570 million in Q4. Nvidia says they're ramping up Blackwell AI supercomputer production with billion-dollar sales in first quarter, and the company did confirm its 1 cent quarterly cash dividend. And if you look at the average estimate from Wall Street analysts for next quarter's guidance, it was $41.5 billion. So $41.5 billion, they raised guidance by $1.5 billion. It's not the $2 billion number that Nvidia used to do, but it's pretty good nonetheless. So I'm here to point out the obvious. This was not a disaster. But the thing that's really important right now for Nvidia and for the rest of the AI trade is, what does Nvidia say about DeepSeek on their earnings call? Do they have positive things to say? Do they have negative things to say? Do they, suggest that longer term their businesses are not going to need as many chips? What do they say about that? That is what is really going to drive the final move higher or lower for Nvidia. Now, Donald Trump kind of crashed the stock market today. The S&P was up about 1% for a majority of the trading day today, and that sharply reversed lower when you had some tariff announcements. 25% tariffs on the EU, which is not something we have heard of yet. We've heard about reciprocal tariffs, and we thought it would be on a product by product basis. Like, if you tariff our lumber 50%, we're going to tariff your lumber 50%. If you tariff our cars 100%, then we're going to tariff your cars 100%. That was easier to go off of. Well, Donald Trump says it could just be a 25% flat tariff on everything. So yeah, markets didn't want to hear that today. And this was really the big headline. Says Trump that tariffs will go on. Not all, but a lot of them. Talking about Mexico and Canada. What's interesting about this, though, is he kind of alluded to tariffs that may not go on if the Trump administration likes the progress that they are seeing on the border and with illegal drugs. Now, he says they're going to go on, but kind of opened up a pathway for them to be delayed even further. He did talk about Europe, though, And some people walked away from that thinking a 25% tariff could be on Europe soon. And I think that's where some of the worries are coming from today, because that's kind of new information. We've known about Europe tariffs, that they will be tariffed eventually, but we haven't heard an exact number. And people are walking away from the cabinet meeting today thinking Europe could be hit with a 25% tariff as well. Fed Bostic says labor markets are looser but not loose. And Fed Bostic says the estimates for the job break-even rate are as low as 75 to 100,000 per month. Fed Bostic says the Fed needs to stay where it is and see how the world evolves. Again, Trump says Canada and Mexico tariffs go into effect on April 2nd. And here you can see that headline, Trump's decision on tariffs on the EU at 25%. And he says details on EU tariffs coming soon. He says the EU tariffs to be 25% on autos and other things. Again, don't know what those are, but quote-unquote other things. Trump says that he does think he will get a deal done with Putin, and he believes that Putin had no intention of settling the Ukraine war. And Trump says he wants to see if they can make a deal with Russia before talking about loosening sanctions. Fed Bostic says heightened uncertainty is causing people to wait. You can see the VIX today is up around 0.5%. Albeit, I think that's pretty good considering the markets fell so much from the highs today. The Dow is down 0.5% at the time of recording this video. The S&P 500 is break even. The Nasdaq up 0.25%. The Russell, the outperforming index today, up 0.6%. Bond yields are moving lower by about 4 basis points. And oil is also moving lower, around 0.65%. So some of your growth concerns are continuing. If you look at the fear and greed index over on CNN, you're coming in at 23. Yesterday you closed at 22. So markets are still extremely fearful. Market momentum, extreme fear. Stock price strength, extreme fear. Stock price breadth, fear. Put and call options, extreme fear. Market volatility is neutral. Safe haven demand, extreme fear. And junk bond demand currently in fear. If we look at the percent of stocks currently trading above their 50-day moving average, not much of an improvement there, but a little improvement today, coming in at almost 41% of stocks trading above their 50-day moving average. So about 59% of stocks are below their 50-day moving average. So a lot of broad-based weakness out there. And I think that does bode well heading into Nvidia's earnings and subsequently what we could see over the next, couple of days with what I believe will be a positive reaction post Nvidia earnings. Now, tomorrow we will get a new AI investor sentiment survey, and I wouldn't be surprised if bearish sentiment hits a new multi-year high. You came down a little bit from last week's, multi-year high bearish sentiment, but it's still pretty bearish overall. 40.5% of investors are bearish, 30.3% are neutral, and 29.2% are bullish. So there's not a lot of bulls out there at all. And I wouldn't be surprised if that number drops even further in the report that we get tomorrow. Now, we're clearly still struggling through this growth concern that we have in markets. And today we did not get much for economic data. We had a couple Fed speakers. We had some oil stockpile numbers, and we had a 7-year bond auction. But that was it. And you could see bond yields are trading lower today. Oil is lower today. Markets are lower today. That is your typical growth scare reaction. Now, I think markets could likely move higher after Nvidia earnings, as long as we don't get anything too crazy on like the conference call or, that scares people out of the AI trade. I think all is going to be good there when it's said and done. Now, tomorrow morning, we get durable goods orders month over month, expecting a positive 2% number. Last month was negative 2.2%. So if that number comes in low, welcome to more growth concerns, okay? And that's not going to be great for markets. Tomorrow morning, we also get the second estimate for quarter-over-quarter GDP for Q4. We're expecting the GDP number to fall from 3.1% down to 2.3%. So expecting a big drop there. Initial jobless claims are expected to come in at 225,000. Last week they were 219,000, so you also get that. You do get Fed bar that speaks at 10 a.m. pending home sales month over month and year over year at 10 o'clock in the morning tomorrow. Kansas Fed composite index, manufacturing index, Fed Bowman speaks, Fed Hammock speaks, Fed Harker speaks, and then that is it until Friday. Friday you have PCE, personal income, personal spending data, some inventory data, retail inventories, wholesale inventories, even Chicago PMIs, which will give us a new update for the Atlanta Fed GDP Now tracker for Q1 GDP, which is currently at 2.3%. It's fallen from almost 4% down to 2.3%. And that's kind of where the blue chip consensus currently is, the range of the top 10 and bottom 10 average forecast. So if you get some bad numbers on Thursday, you're going to see GDP estimates come down. Again, not going to be great for your current growth scare. And I think that is going to be a huge catalyst, is really going forward economic data and where we are, if we're going into a recession or if, something is breaking in the economy. That's kind of what people are waiting to see. Now, this morning you did get some real estate data, and I'll share that with you because that didn't help anything. And I almost skipped over it. Easy to skip here. You have new home sales for January at 0.65 million. That is down from 0.73 million last month. That is a month over month decline of 10.5%. The estimate was negative 2.6%. So we came in like 5 times worse than last month. Okay, that's rough. And already going through a growth scare, the last thing people want to see is real estate slow down even more. It's already really slow, and it looks like it's getting worse, which is not great for the economy. Let me know what you think about this information down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.